Welcome back, everyone. It is Tuesday, November 28th, and this is NYU Grads Daily Podcast, episode 93. Man, I've been under the weather. I don't know if you can hear it in my voice. I've been like coughing for the past 48 hours with on and off fever. It's not COVID. I know I missed an episode on Monday, but it was pretty much a snooze fest. So I didn't feel too bad about not covering the Monday session, but I'll be honest, I miss you. I miss the group. I miss you guys and girls. I miss doing this and bringing the markets to you in a digestible, 15-minute snackable podcast. This one might be a little bit longer because I want to catch up with you guys. I was gone for almost a week in Milan, Italy, taking a breather before Thanksgiving, and then that was I've never been. I've been to Italy, multiple places, like Sicily, Florence, Rome, but I have not been to Milan or the Bellagio Lake Como area. And I knew it was going to be a busy Thanksgiving here in New York. It typically is because everybody likes to visit New York in the Christmas time or the holiday time. So we often host or entertain family and friends. And my wife and I wanted to just take a few days to ourselves. But we had a lot of fun. Uh, Lake Como is harder to get to in November because a lot of things are shut down. They start to shut down in October. If you've never been there, that's just a FYI. But we love that because it's empty. So we did not get a chance to go to Lake Como because a couple interesting facts, but um, we did go to Bellagio, and the way you do that is from the center of Milan. We were staying right by the Duomo Church. You take a train from like their Penn Station, so to speak, and you take the train north to a town called Verona. It's about an hour and 15 minutes away on the train. And once you get to Verona, you take a ferry, which brings you to Minagio, uh, with an M, Minagio. Then it stops at Bellagio, like the Las Vegas casino. But the casino obviously is based off of the architecture and beauty of the real Bellagio, Italy. And it's quite stunning. So the lake itself, it's all the same body of water that Lake Como, Bellagio, Minagio, and Varenna all share. And one of the things, the impressions that I got that will always stay with me is that the water is very flat. Um, if you've ever, like, I've never been to the Great Salt Lake, but if you've ever been to like Lake Tahoe, it's like a big body of water and it's pretty smooth, like glass. Like there's not many waves, and the ferry ride was smooth, like roller skates. But when you come across the bend from Minagio and Bellagio comes uh, into view, it's stunning. It doesn't even look real. It's like in the middle of nowhere, and you have this beautiful town and architecture and colors. I will post a few photos from Bellagio. I posted on Substack Notes while I was there. If you don't follow me on Substack Notes, I'll share on the show notes. But that was a beautiful area. The other tidbit that I wanted to share with you guys, the locals told me, because wherever I go and travel, I try to blend in with locals and go to local spots. One of the wineries or wine stores told me that Lake Como is now highly populated with Russian oligarchs. So that's where they're hiding out. They're not hiding out in Billionaire Row in Manhattan anymore or Miami. Uh, their main hideout right now is Lake Como. So if you didn't know that, that's just some trivia knowledge. Um, and transitioning back to the markets and business and finance, Milan has always been known to be the financial center of Italy. That's why I've never been, right? Like everyone works, it's hustle and bustle. I want to go to like Palermo where it's like low, slow pace of life. The food's delicious. Everyone's a little chubby and happy. But Milan is, like New York. It's like a mini city, probably like the size of Boston or Chicago. Um, but it's known for fashion. It's known for shopping. So one thing I noticed because I was there right before Thanksgiving, there were a ton of tourists, but tourists in Milan are predominantly, from what I observed, other Italians from other parts of Italy because you can quickly take a train to Milan for the weekend or for the day. Um, Ton of shoppers. I mean, you think Soho, New York is set up for shopping? Our hotel was right by the Duomo church, and you can find every single luxury retailer footsteps away from this famous church. It's like the church doesn't matter. It's just set up to drive traffic, foot traffic there to get people shopping. So I didn't enjoy that part of it, but I enjoyed the church tours and all that stuff. I also saw the Last Supper, the actual Last Supper, the original, in a church, which was amazing. But it was just a lot of consumerism. And coming home on that flight, which is like almost 8.5 hours, I was thinking about what would happen here on Black Friday, and we have our answer. I used to work at Adobe. They have a retail tracker, and we broke all records. I think it was like we went from like 10 to 10.8 billion year over year, something like that. Um, I didn't dig into the numbers, right? I don't know if that's unit sales or total dollar amount sales of online shopping, but if it if it's not inflation adjusted, then it could just simply be inflation that is making the increase in the e-com numbers. I'm not 100% sure, but regardless, the headline number beat all records, and it just is just so amazing to me that in the backdrop of the lowest savings rate in American history, we are breaking records for Black Friday shopping. It's a little disgusting, and it's, I guess, just the culture of the US. Like, we're just consumers. And I was alarmed to see the heavy usage of buy now, pay later. Like if you buy anything on eBay or if you buy anything online, you always see, and even Amazon, like, buy now, 4 payments, no interest. They say that, but then no one pays in the 4 payments and then the interest accrues. And a lot of these like companies like Klarna and Affirm, if you do buy now, pay later and you go over that grace period, they're going to hit you with pretty high APRs. So this is just my hunch. I don't have obviously proof of the future, but I believe historically it has shown that Black Fridays are pulling forward future demand. And I think once we get past Christmas, because my wife tells me the best deals are actually after Christmas, because that's the stuff that retailers just need to get rid of off their books. But after that, after Christmas, and then we turn to the New Year, I think the consumer is going to be tapped out. And some of the things that lead me to believe this are the end of the forbearance from COVID pandemic on mortgages, the end of the phony PPP loans where you have a one man or one woman business and you say you have 250 employees and you get 30,000 per employee, and then you go out and buy a house in the Lamborghini. Like all that stuff is done. That spigot of equity or liquidity is shut off. So I don't see where the additional spending will come from unless we see an increase in incomes. I also believe, and I do have data on this, I used to work at a SoftBank funded startup. Um, I have contacts in the VC world as well as private equity. Uh, 2024 is going to be a year of the down round. If you don't know what that means, I won't go too deep into detail, but let's just say I'm going to just break it down like anyone can understand this. Like I could explain this to my mom. You start a lemonade stand. You're not profitable, okay? You're making $100 a day, but you're spending $1,000 a day for advertising, your input costs, employees, because you're too busy to man it yourself. You have 4 employees working the lemonade stand, and you took on debt, SoftBank Capital, or Andreessen Horowitz gave you $1 million on a $10 million valuation on that lemonade stand. Well, you're out of money and you have this debt and you can't pay your bills, you can't pay your payroll, you can't pay for the lemonade, the cups, the water. So you got to go back to your VCs or the bank and raise more money. The reason why it's called a down round is the bank or the private equity company or the VC will say, hey, we will give you another million, but your valuation, last time we valued at 10 million, you are now valued at a 4 million valuation total, which means you're going to lose a lot of equity as the founder of this lemonade stand, and I'm going to basically take 90%. I'm going to probably buy out your previous investor for pennies on the dollar, and that's what's coming. And in that environment, only those that can either raise cash at a lower interest rate, like an Apple, right? Like Apple's pretty secure right now. They can go to the markets and raise capital. They can issue stock to raise money. They can sell bonds, corporate bonds to raise money. They can take a loan quite easily. But if you are some of these, 50 to 1,000 employee tech startups in Silicon Valley, in Austin, in New York, you're working on a WeWork or co-working space. Everyone's working remote. You're not profitable. All of those companies are at risk in 2024. And that is going to potentially increase the amount of layoffs. And it's just a trickle effect, right? So more layoffs, more issues with the economy, people can't pay their mortgages. But with that said, I also want to not forget, and I'm very cognizant, it's an election year in 2024. I normally don't talk about politics on this podcast because it's so polarizing. But if you look at this objectively, typically on a presidential election year, Wall Street and politics are very intertwined, and they don't want to upset the apple cart, and they will try as hard as they can to keep this game going because they want all to be elected again. They want their jobs. So I see that they being Wall Street and politicians will try to keep this game going. They'll try to prevent foreclosures. They'll try somehow to give the student segment some type of kickback. Maybe it's not a forbearance on their student loans. Maybe it's putting off payments for another 6 months until after the election. I don't know. They're going to try everything they can. But I see a lot of cracks everywhere I look. Let's jump into it. I know I went off script today, but I missed you guys and I wanted to kind of catch up and kind of share what is top of mind for me. But I digress. Let's go back into the numbers. So today, on Tuesday, and forgive me if I cough. I've been coughing like on and off all day. I will try to edit as much out as I can. So on Tuesday, November 28th, we had 305 new highs versus 162 new lows. So that's good on the bullish front. We have right now 30% of shares below the 50-day moving average, which is a big improvement. And we have 50% of shares under the 200-day moving average, which isn't great, but it's better than it was. Taking a look at some of the leading names, I saw Tesla was up like 4.3%, which is big. Walmart was up 1.1%. Apple, it's up 0.3%. Microsoft was up 1%. So nothing doing there. What I noticed was on a lot of the risk stocks, the ones that were high flyers in the last 3 years and they got crushed. I'm talking about the Rokus, I'm talking about Carvana, all of those names where it's like meme stocks, right? Those went up a lot today. Again, I'm kind of going off script here, but I'll name a few. So Affirm Holdings, the buy now, pay later company, up 11.5%. Lyft, up 9.8%. Birkenstock, recent IPO sandal company, up 9.3%. Wayfair, the furniture retailer, up 8%. Coinbase, up 7%. VinFast Autos, up 5.43%. I can't believe that thing is still trading and there's no investigators. Barrick Gold is up 5.25%. Crocs, rubber sandal company, up 5%. Gold was up 4.8%. I mentioned Tesla already. Ally Financial up 4.26%. Also, Ally is like bottom of the barrel financial company. They're not like, servicing Jamie Dimon. They're servicing people who are lower credit score rating. Roku up 3.7%. PayPal up 3.6%. Zoom, the video conference company, up 3%. ARC International Cathie Woods Fund up 2.75%. Fresh Pet, fresh food for your dog out of a vending machine, up 2.4%. Sweetgreen up 2.24%, and AI up 2.28%. So these are the kind of things that were up big today. I don't know about you, but I don't think they're going to lead us to a new promised land. And the volume, although was better than Monday, which was like 1/3 the volume on the SPY of average daily volume, it was pretty bad for volume. And I'm gonna assume that if it's low volume day, we're just gonna drift higher. Low volume day, I'm gonna assume if we're in the red by 3 p.m., 3:30 p.m., we're gonna zoom back up to the day's high. If it's low volume, I'm also gonna guess if it's high volume, you're going to see the Vol-D, or the accumulation distribution volume, tank, and you'll see a sell-off. That's my guess. I think low volume means up day. High volume is going to be a big sell-off day. That's just my hunch. The 10-year was weak, which the bulls need for wind in their sails. Healthcare was weak. K. Hovanian, the home builder, was weak. Disney was weak. PJT Partners, private equity, was weak. What to watch? I'm going to sound like a broken record, but I'm not going to deviate from the truth. Keep watching the Magnificent Seven, especially Microsoft, Tesla, NVIDIA. Keep watching yields. Those are really the two pillars. It's going to be light volume until probably the second week of December. I don't even know if anyone's back yet to the office. Everyone's still drunk, buying crap online. That's it for today. Some housekeeping items. I shared with you what I did on my vacation. I would love to hear from the audience how your Thanksgiving or Thanksgiving plus vacation time off was. You don't have to use any personal identifiable information, but I would love to see that in the comments. I just want to see how your holidays were, and I hope you all had a happy and safe Thanksgiving with your friends and family. And if you were looking for that deal, I hope you got it. Um, the other one is because I've been away so long and I'm kind of sick. I don't know. Like I keep relapsing. Like I feel great after like a few pills. I'm like decongestion and like Advil. But I keep relapsing, and the fever comes back. So I don't know. It's touch and go. I may do it depending how I feel. I may cover the markets on Wednesday as well, but I just missed everyone. I missed doing this, so I wanted to get back to it and give it my all. Thank you so much, by the way. While I was away, I saw many pledgers and many new subscribers while I was on vacation, and it almost made me cry. Uh, Sometimes when you're doing research, sharing online, sharing a podcast, you just don't know how it's going to be received. So it means the world to me. With that said, because I was away for so long, and because I had repeat content come out, like the best hits type of repeats and replays, I'm going to extend the 33% off for pleasures till December 1, to the end of the month. So all you have to do is subscribe, and then once you're a subscriber, that subscribe now button will turn to a pledge button. And Substack will take a credit card, but it's not charged. It's basically you're showing support that in the future, when I do come out with the premium service with Watchlist, webinars, and I want to actually interview you, the subscribers. I want you to talk your book. I want you to tell me why I should buy something and why. I want to learn from others as well as share what I know. Um, so more to come on that in 2024. But everyone who pledges uh, by December 1, I'm manually keeping track of this, will eventually, once I launch the premium, will have a 33% discount, which is basically 3 months free of the premium service. So it costs you nothing to do. If you support the work, if you enjoy the work, and you're learning, it would mean the world to me if you would pledge. With that said, I'm gonna go drink some more tea and try to rest this off. But I will see you guys hopefully after the Wednesday session. All right, later.